Thanks for having me today. Well, it is interesting times. We're seeing the world coming through a period of euphoria as we get this new vaccine that hopefully will return us back to normal. I think we're going to start to see a reflection of the Nigerian economy since most of what has happened has been based on really imported inflation. And I expect that what we've seen happen in the stock market of late is going to persist for a little while. So there is a lot of room for there's a lot of room for optimism, but there are still some social and infrastructural problems that we need to address if we want to sustain that and make it more durable.
All right. All right. Interesting. You mentioned the inflation report. Reports reaching us is that with the National Bureau of Statistics will be releasing the current inflation figures for October at 11:30 later today. But for you, though, what's your call and what's your take on how you think this will play out?
Yeah, well, it looks like inflation is going to tick up. If we continue to look, the key thing that drives our inflation is really important. So as the local currency loses value, as we start to see some prices rise across the globe, those things get to be imported into the country. Add the little bit of unrest that we had over the period. I think that will continue to stoke inflation a little bit on the local.
All right, now let's come into the markets and look at what's been playing out with the equities. We've seen that improved rally in the market. Week today, the NSE gained about 12.9% last week, bringing the year-to-date returns in the markets to 30.5%. What's this renewed look into the equities for investors?
Well, I think the number one thing everybody has to remember is the process of pricing equities. One of the key metrics you put into that is your risk-free rate. As the risk-free rate continues to fall, what you will find is equity tends to look a lot more interesting, and as such, people are willing to bid up those equities significantly, and that's what we've seen. With risk-free rates in the country falling to what looks like all-time lows, people will continue to look for value in equity securities where dividend yields are now starting to compete favorably with one-year Treasury bill yields.
Right, because when you look at the kind of returns we're seeing in the equity space, just for context here, the industrial goods index are outperforming the all-share index is up about 48.5% year to date. We're also seeing, when you look at the premium board index, which houses some of the top stocks we're seeing in the market, that's up about 49%. You know, we haven't seen the market perform this much in quite a while, Winston. But now let's flip over to the other side and look at what's playing out in the fixed income space and what's your outlook?
Well, so that's the thing. The fixed income space is what's driving the equity space. As we continue to see local interest rates being kept at all-time lows, sub 2%, investors are going to now see equities that are yielding 1 and 2% that also have a growth engine built underneath it as a very viable option. Now, the question now is, are we going to continue to see this low level of interest rates going forward? It depends on what the question that the central bank wants to answer. Do we want more inflation or do we want more growth? I think we're in a position whereby worrying about inflation is not a major issue, and we're going to see depressed interest rates for a significant amount of time as the federal government and the central banks tries to stimulate a lot more growth in the system so we can start to work our way back to close to normal.
All right, but looking at how things are playing out, though, yes, you mentioned the growth. When you talk about growth now, was expecting the GDP figures to come out later this month, and even we have the final MPC meeting for this year. For when you see, though, what should be the monetary policy stance at this point going into the new year?
Well, the world as a whole has decided that, inflation doesn't matter, push as much money into the economy and ensure that there is growth to take us through what has been an enormous amount of destruction of both production and demand. So now, if Nigeria follows suit, that means there should be no changes in what we'll see with the central bank, and we'll continue to keep interest rates very low, hoping that will continue to stimulate growth that would help work us back out of what has been a really tough 2020.